All right, good afternoon, folks. September 6th again, but it's 2 o'clock in the afternoon Pacific, and the market's pretty much just ended. So I kind of wanted to do something a little bit different. So I said I wanted to go over the New Zealand dollar. So I started with the weekly, and I kind of partially labeled this, but basically I have this as a 1, but this video is just going to be just pertaining to labeling and how I come up with certain counts and then how I test it and do trial and error before I actually get into a trade. So just starting off with the weekly, and that doesn't mean that this is, anyone who already knows Elliott, if you have something totally different, that's just fine. I'm kind of just playing with it, and as I continue to do measurements based off of the Fibonacci ratios, that's when I come up with better conclusions of what the best probability that this particular market is in. So this here I have as a 1. This move down here as my 1. This is possible A, B, C of 2. And now I have another 1, 2 count, which is basically 1 here. And then 2 there. And then as you can see here, you can count 5 waves. You can count 1, 2, 3 here, 4 here, and 5 here for 3. So instead of cluttered, so I could do it. But let me see. You could do, it's possible that the 1 can be here. 1, 2. Definitely this impulsive move down from this top will be wave 3 of 3, basically. And now you have an A, B, C for 4 here. And then you have a 5 for 3. That completes the wave 3. And now this is where I did all my measurements to see if this particular move here was a wave 4. So this is why you see all these different Fibonacci's. So let me explain this. So I have a 3-wave move starting from this bottom where my 5 is at. I have a 1, 2, 3. This is my A here, right? So that's A of W. Then I have a A here, a B up the top, which is an expanded flat B. Then a C of B here. And now this entire wave is an ending diagonal. This entire wave here is an ending diagonal wave C, which inequality, as far as distance, it was 1.618 times the length of wave A. So this is why you see 1.618 over here at 74.33. That's the particular Fibonacci level. It went just above that to 74.82. So 40 or 40 plus 45 ticks or so, give or take, it spiked up. But this particular wave ending diagonal was 1.618 times the length of this particular wave A here. And when it comes to measuring zigzags, basically, or double zigzags, wave A is normally it is 100% inequality of wave C, or then it's 1.236, 1.382, 1.618, and then anything after that, it's rare that you see that, but you'll always see, normally it tends to travel 100% of equality of wave A. So basically, giving you an example, if this wave A was complete, right, and then all of a sudden this wave B was complete, and let's just say none of this chart over to my right, this entire wave C, was here, then what you would basically do is you would try to measure the length to see what's going to go on. So you would just go to your Fibonacci extensions, and then you would basically go from the bottom of wave A to the top of wave A, and then down to the bottom of wave B. And then from there, as you can see, the 100% was at 70.29. And then you can put 1.236, 1.382, 1.618. And that's basically, you don't know just based off of that where it's going to end. It could have ended at 100 right here. But then as you see that price, and found some support here, then let's say if you thought I was going to end here, and let's say you went short, Well, if you went short here and you find that it was finding some extreme support here, well, then you know to bring your stop loss down. And then if it went up like it did, okay, now you need to say, okay, what's the next level? The next level was 1.236. So then let's just say 1.236 was here. As you can see, it found some support and resistance in those areas, and it actually did go down, but it never did penetrate the cloud, and it never did go lower than the previous low. So then you say, okay, well, 382 now, and then 618. And then at that point, when it went just above 1.618, that's when it found its low. However, it wasn't lower than this one. That's when you know that you're in a zigzag, basically, and that's when you know you're most likely in a double zigzag. So when I looked at this particular pattern, right away, when I look for patterns, and especially if I see an impulse wave, which is over here to the left, when I see something that's all the way that's basically impulsive, like this particular move all the way down, I then look for a triangle or I look for a zigzag, or or a double or a double zigzag, basically. Now in wave fours, it was either going to be one thing. You're either going to see a triangle, or a flat combination, basically. So in this case, this is considered, you can consider this a flat combination, but it's but I would consider it a flat combination, basically. But you have 3 waves here, you have 3 waves here, you have 5 waves here for W. Then you have the X, which pretty much ended right on the tip of the 50% mark at 68.55. Now you have an A, which is a 3-wave move up. You have another, you have a B for a 3-wave move down, and then you have another 3. Basically, well, you actually can count 1, 2, probably 3, 4, 5. So you have another 3, 3, 5 for Y, basically. So ABC for Y, or ABC for Y. So now from the top, I mean, it's just shy of the 0.618. It didn't go to 0.618. So when it comes to the measuring wave W and equality of Y, being that wave W was relatively a large W, you already can you already will know that wave Y probably won't be 100% of quality of W. Most likely from there, when you see that wave C extended by 1.618, then you know that the Y will probably end roughly at 0.618 or a little bit lower. And it went just above 50%, basically. 50% was 74.82. It found its ending resistance at 75.57, and then as you can see, 0.618 was just under 100 ticks above that. So this particular, the current, we're probably in wave 4 of wave 1 of 5. What I mean by that, if this over here is wave 3, you have a WXY for 4. And now you're going to have wave 1 of 5. And then now, if once I do all these measurements and see that everything is going to add up, what I'm going to do, and I'll start posting this, is I'm going to go down to a smaller time frame sometime tonight or tomorrow. I'll go to a daily. I'll count that up, and when a daily, I'll be looking at this entire move, and I'll see if I can count 5 waves down from a daily. Then I'll go to like a 480 or a 240, and I'll try to count that. From there, if I see the count, this market appears to be to the downside. It's bearish. Obviously, if this was wave 3 and this is impulsive and this is WXY4, well then this is bearish. However, I'm expecting some short-term dollar strength. So if this is wave 4 currently, we have one more wave down, which will probably find some support near 70, right? 70, 50, 70, 85, somewhere around here, somewhere around the 70, 82 area, 70, 82. This is where this particular line is at. So you'll find some support, and it's possible that can be the end of wave 1. So then when it comes to dollar strength, you're going to see wave 2, and that's where I'll be looking to actually enter short in this market, because I'll look and I'll basically do a retracement, and I'll look for that 0.618, 0.786 area. And often what I do just to do some nice swings is once A of 2 is complete, I'll wait for that 50%-ish pullback in wave B of 2, and then I'll take the wave C of 2 to the as a counter trend trade. I don't like to trade wave A's, and here's my reason why. Number one, I don't know where this is going to end for wave 1, and I don't like to guess anything. Like I say every time, I don't care if I'm right. I care if I make money. Period, point blank. So I don't even want to guess. I take the whole guesswork out of all this. I'll wait till wave 1 ends. If wave 1 ends at 70.85, so be it. If wave 1 ends at 70.26, so be it. If wave 1 comes all the way down to 69.50, so be it. I want to see that retracement. And once that retracement is forms in 3 waves, I know we're in a corrective pattern. From there, once I see that the correction is done, if it's, let's say it goes, wave A goes up 38, 0.382 or 0.5% of this wave 1. Well, now I know it's going to retrace that again, but it's going to be in the same trend, and that's going to be wave B. So then once wave B is complete, I like to catch wave 2 or wave B of C, depending on what particular type of pattern it's in. So once wave B is complete, if I miss the first opportunity for the first wave up of C, which is technically will be 1 of C, well then I'll wait for the pullback in wave 2 of C so I can catch 3, 4, and 5. And that's how I ended up getting, just to show you a great example, we'll come back to this New Zealand dollar later, just to show you an example of that. And Forex Trader, who's another Elliottician with the YouTube channel, thank you for the compliment. And he pointed out something in the pound. We were both looking at the same thing, and he just pretty much explained, like, he didn't think it was going to do that, and he was like, congratulations. And that's what this community is all about. We're all Elliotticians at the end of the day, and it's not about copying. It's not about any of that. It's about helping everyone label proper analysis and trade for a living. We all pretty much have families. We have other hobbies, but this is not the type of industry to where you feel like you need to withhold information. I believe this is the best industry to actually get as much information out as you can. So I'm not going to always be right, and that's the whole point of trying to build the community, because maybe my eyes can't see something. Maybe this is not an ABC, although it appears that way. So if it's not, and someone doesn't think that, it's up to that person to be like, hey, I have it a different way. Let's talk about it. Let's come up with a better conclusion. But basically, what Forex Trader and I were looking at was when I had wave B finishing, then I took this trade up for a little over 100 ticks for wave C. Basically, I think I took it about right there, and I took that up for 100 ticks. Now I'm short. Last night I posted a video, and I basically projected that the price would go between 130.50 and 130.75, at which I actually jumped in and went short. And I had a half a contract at, I believe, 30.20-ish, and I had another contract in at half a contract in at 30.75. Price went to 30.82, and as of right now, I have that as the end of wave C of 2, and for the minimum target to go down is 125.92. That's a minimum target. And this is wave 2, and we're going to see wave 3. Wave 3 should travel 1.618 of this particular length. So it's going to be well below that, but I'm not sure that this is wave 3. I mean, this is the end of wave 2 yet. However, being that it's at 130.82, it can't go above 132.67 or the entire, or basically it would go more than 100% of wave 1. So I do have my stop above this particular 2, just above it at 131.65. So it doesn't mean that this price can't go up. However, based off of the divergence that I see here, as you can see, this particular RSI is higher than this particular part of the RSI. However, this is lower. That's called divergence. If you don't know that, I'm pretty sure most traders know that. And I was looking for that. And as you can see, once the market made its high at 130.83, give or take a few ticks, now it's currently at 130.43. Same as the euro dollar. This is the euro dollar. I think I looked at a 60. Did I do a 60? Yeah. So as the euro dollar. So I have a 1, 2, 3, 4, 5. I have an A, a B, a C for 2, and now I have a 1 and a possible 2. And as you can see, where the 2 ended, when it ended at 1951, give or take, it found some, it went down. And now this right here is telling me prices on the other side of the Ichimoku clouds. It's very likely that price is going to find some resistance at 129 or 1923, 1925, and it's going to bounce off that and come down. And once it comes below this cloud, then it's off to the races with the money. I'm currently up about 50 ticks on this particular trade with one full contract. So it's a decent trade. Moving on to the Aussie CAD. Aussie CAD went in my direction, and it paid off handsomely. Yesterday, if you go back and look at my video, I believe I was up about 70 ticks. Right now, I'm up 182 ticks. It's great to have this on film, on camera, because just last week, a little over a week ago, I had this entire move as a totally different count. And if I wasn't paying attention and just really just sit there and focus, I would have missed this trade completely, because I had my entry like way up here somewhere. And then I looked at it, I was like, wait a second, that's completely off. I see a different pattern. Let me move my entry down. I moved it down. Within a day, I got popped in 181 ticks later. Most likely, I'm going to move my stop a little, move my stop down a little bit and lock in some of these profits. But if everything is correct, it has a lot of ways to go. Especially, I'm looking at 95, 93 as a minimum target, where the 50% is at, and where the A of the previous degree is at. So at a minimum, I should see hopefully another 200 ticks. So I'm not going to put my stop loss too low and then get prematurely popped out. One thing I want to look at again too is I believe I jumped back into the dollar yen. I got popped out, and but now everything appears to be going back on track. I'm up 74 ticks. I'm a really small contract on this one because I wasn't sure, because I still have this one possibly going a little bit lower. But what I did is just kept my stop loss right where the red 300 moving average is, and prices did go up. So 74 ticks, not that bad, not bad at all. Last thing I want to look at, I believe the Aussie. The Aussie should start continuing up from here. I don't exactly have this. This is possibly a leading diagonal wave. 1, 2, 3, 4, 5 for 1 here, and then maybe a A and possibly a B. So I need to. I most likely with this market, I'm gonna do a little bit more research on it maybe later today, but it should be making one more high above the current high of 80.65, give or take a few ticks. Most likely going to go more towards 81, but I don't like to just say most likely this, most likely that. I like to actually put some data behind what I'm saying. So I'll basically try to get that going. But the CAD dollar is something you probably want to pay attention to if it goes down a little bit more. Right here, it should find some support in about 200 ticks, give or take. At that point, it's possible that will be the end of wave 3. However, the end of wave of 3 of 3. Now, if this is wave B or 2, well, we have this price going, below 1550. So if I ever wanted to get in this trade right now, I should have got in it right here, but it's just too many markers I was trying to look at, and it happens like that. But if I really want to pay attention to this market, the first thing I need to do is try to see where it's going to pull back, and if it pulls back up to this 61.8% area, then I might go short. But it's definitely something to keep an eye out on. But being that the dollar should temporarily get stronger, it's going to find some support soon, and it's going to go. The market will go up, but it is a counter trend, so it's up to you if you want to take that particular type of trade. I'll go back to the New Zealand dollar. This is pretty much, I just did this right before I started this video, so it's not a guarantee that this particular count is 100% accurate, but I will look into it, and it looks pretty good so far. So yeah, I'll be back tomorrow. I'll keep updating the euro and updating the pound. Those are pretty good trades, I believe. And if I see anything else on the horizon, then I'll do that. I will look into trying to see where the end of wave 1 of 5 is going to be, and I'll start following wave 2 so that I can actually, be able to call a decent short in wave 3 of 5, which will definitely go below wave B. So happy trading. I'll see you guys tomorrow.